Bitcoin has done it again. On this day, July 14, 2025, the world's most famous digital currency reached a new all-time high. It soared past the $120,000 mark for the first time in its history. This is a huge milestone that many thought was impossible just a few years ago. After a brief dip to around $96,000 late last month, the price has recovered with incredible strength. This sudden and powerful surge has captured the attention of everyone from Wall Street traders to ordinary people looking for new ways to protect their savings. This is not just another number. It shows a growing belief in Bitcoin's long-term value. This new record is much more than a temporary spike. It represents a doubling of Bitcoin's price in just 1 year, a stunning 101.4% increase since the middle of 2024. The momentum has been building steadily throughout 2025, showing a strong and consistent demand from investors around the globe. The story behind this incredible growth is not simple. It is a mix of big companies making large investments, new financial products making Bitcoin easier to buy, and growing worries about the stability of traditional money. Understanding these key factors is essential to see why Bitcoin is performing so well right now. The excitement around Bitcoin today feels different from past rallies. Previous price surges were often driven by smaller individual investors hoping to get rich quick. This time, the foundation seems much stronger and more stable. The conversation has shifted from speculative gambling to a serious discussion about Bitcoin's role in the global economy. Big banks, major corporations, and even pension funds are now part of the story. They see Bitcoin as a form of digital gold, a place to store wealth during uncertain times. This change in perception is a critical reason why the current rally has so much power behind it. What makes this moment so significant is how quickly the landscape has changed. Just over a year ago, many experts were still skeptical. They called Bitcoin a bubble waiting to pop. But the events of 2024 and 2025 have proven many of them wrong. The launch of new investment tools and growing economic instability have created a perfect storm for Bitcoin's price to rise. As we explore the reasons behind this historic climb, it becomes clear that this is not a random event. It is the result of powerful forces that are reshaping the world of finance right before our eyes. One of the biggest reasons for Bitcoin's recent success is the arrival of big money. We are talking about institutional investors. These are large organizations like corporations, banks, and pension funds that manage huge amounts of money. For years, they stayed away from Bitcoin, viewing it as too risky and unregulated. But that has completely changed. Companies like MicroStrategy have invested billions of dollars into Bitcoin, treating it as a primary asset in their corporate treasuries. This sends a powerful message to the market. Bitcoin is now a serious asset for serious players, not just a toy for tech enthusiasts. This trend was supercharged by the approval of spot Bitcoin ETFs, or exchange-traded funds. Think of an ETF as a simple way to buy something without owning it directly. Before, buying Bitcoin could be complicated. You needed a digital wallet and had to use a special exchange. Now, with ETFs from giant firms like BlackRock, anyone with a regular brokerage account can buy a share that tracks Bitcoin's price. This has opened the floodgates for both everyday investors and large institutions to get exposure to Bitcoin easily and safely. The demand through these ETFs has been enormous, constantly pushing the price higher. The impact of these ETFs cannot be overstated. They have added a new layer of legitimacy to Bitcoin. When a trusted financial giant like BlackRock offers a Bitcoin product, it gives other conservative investors the confidence to jump in. We are even seeing this trend go global. For example, BlackRock's Bitcoin ETF was recently approved in Germany, opening up the large European market. This institutional wave is creating a constant stream of new demand for a limited supply of Bitcoin, which naturally drives up its price. It's a classic case of more buyers than sellers, but on a massive scale. Furthermore, major banks like Goldman Sachs are no longer on the sidelines. They are actively involved, offering Bitcoin-related services to their wealthy clients. This signals a complete reversal from their previous skepticism. The entry of these established financial gatekeepers provides the infrastructure and trust that large-scale investors need. Their participation helps stabilize the market and makes it more attractive for even more conservative money, like pension funds, which are responsible for managing retirement savings for millions of people. This institutional embrace is a core pillar supporting Bitcoin's journey to $120,000 and beyond. Another key piece of the puzzle is something unique to Bitcoin's design: the halving. Every 4 years, a pre-programmed event cuts the reward for mining new Bitcoins in half. The most recent halving happened in April 2024. Before this event, 6.25 new Bitcoins were created about every 10 minutes. After the halving, that number dropped to just 3.125. This process makes creating new Bitcoins much slower. It ensures that Bitcoin becomes scarcer over time, just like a precious metal. This built-in scarcity is one of Bitcoin's most powerful features. This reduction in new supply happened at the exact moment when demand was exploding. As institutions and ETFs brought a flood of new buyers into the market, the amount of new Bitcoin available was suddenly cut in half. This created a severe supply shock. With more people wanting to buy a product that is becoming harder to get, the price has only one way to go: up. The 2024 halving dropped Bitcoin's inflation rate to below 2%, making it a harder asset than many government-issued currencies. This engineered scarcity is colliding with peak demand, creating the perfect recipe for a historic price rally. At the same time, people around the world are growing more worried about their own money. We are seeing high inflation in many countries, including over 7% in the United States. This means that the cash you hold in the bank is losing its buying power every day. Central banks have printed trillions of dollars, which weakens currencies like the dollar and the euro. In this environment, people and institutions start looking for a safe place to store their wealth. They are searching for an asset that cannot be devalued by government decisions. For many, Bitcoin is becoming that safe haven. Global instability is also pushing people toward Bitcoin. Events like the ongoing Russia-Ukraine war and new trade tensions, such as President Trump's plan for a 30% tariff on the EU and Mexico, create uncertainty. During times of geopolitical stress, an asset that is borderless and resistant to censorship becomes very attractive. You can access your Bitcoin from anywhere in the world with an internet connection. No government can freeze it or stop you from sending it. This makes it a powerful tool for preserving wealth when traditional financial systems seem fragile, adding another strong source of demand. With Bitcoin breaking through $120,000, many analysts are now looking toward the next major target, $200,000. The question on everyone's mind is whether it can reach that incredible price before the end of 2025. The argument for it is strong. The powerful trends that brought us to today's record high are still in full swing. Institutional money continues to flow in, and the supply of new Bitcoin remains low due to the halving. Some experts, like John Glover from Leiden, have already updated their forecasts, now targeting $136,000 this year, with many seeing $150,000 as the next logical step. Several potential events could push the price even higher. A major catalyst on the horizon is the U.S. Securities and Exchange Commission, which is expected to make decisions on even more Bitcoin-related financial products in the last quarter of 2025. Another wave of approvals could bring in another rush of investment and trigger the next big leg up. If the global economy continues to face challenges with inflation and geopolitical tensions remain high, the demand for Bitcoin as a safe haven asset will only grow stronger. These factors combined make a path to $200,000 seem plausible to bullish investors. However, the road ahead is not without risks. Bitcoin is famously volatile, and its price can fall just as quickly as it rises. One major risk is a change in the macroeconomic environment. If inflation cools down faster than expected, or if central banks like the Federal Reserve decide against cutting interest rates, investors might move back to more traditional assets. A sudden regulatory crackdown in a major country could also spook the market and cause a sharp sell-off. The path to $200,000 will likely include major price corrections and periods of fear and doubt. So, will Bitcoin hit $200,000 this year? It seems possible, but far from guaranteed. The forces of institutional adoption and limited supply are incredibly powerful and unlike anything seen in previous market cycles. My personal guess is that the momentum is strong enough to carry Bitcoin significantly higher. While we may see sharp dips along the way, the fundamental demand from large-scale investors is a game changer. I believe Bitcoin will likely break past $150,000 and make a serious attempt at the $200,000 level before the year is out, though it might fall just short and consolidate before its next major move.